Hi everyone, Daniela Cambone here. Before we get to our interview today, just wanted to wish you a very great start to your 2025. May it be prosperous and above all else healthy. I also want to invite you to reach out to one of my incredible colleagues at ITM Trading. It's a perfect time for you to either reconnect with us or connect with us for your first time. Let us help you build a strategy centered around owning precious metals. Call us today or book your Calendly appointment. There's a link below in the description. Pick the day and time that works best for you. We'll talk soon. Hello, everyone, and welcome back to the Daniela Cambone Show here on ITM Trading. We are continuing with our Outlook 2025. And my guest today, esteemed Professor Steve Hanke over at Johns Hopkins University and a former economist and advisor to Ronald Reagan, says, look, there might be a lot of excitement coming in to the new year for this economy, but he still expects a slowdown. We're going to find out why. Professor, Happy New Year. Thank you for joining us.
Well, Happy New Year to you, Daniela. Great to be with you.
Always great being with you as well, Professor. I follow your work closely, and I love how you say, look, yeah, there's a new sheriff in town. Trump's inauguration right around the corner here. But you say there's a lot of uncertainty that comes with it. Like, he talks a tough talk, but we don't know exactly what he's going to do. And on top of all this, many folks are excited and feel the market is going to be strong. It's going to be a robust economy. But you say don't get excited too soon. You still see a slowdown. Talk us through your thoughts here.
Okay, the slowdown idea is that the fuel for the economy is really what's going on with the money supply. If
Right.
you're injecting more money into the economy, it kind of revs the engine up. If you slow it down and lean back on the fuel, it slows things down. So the reason for that is that the money supply drives nominal GDP. And remember, nominal GDP has two components: the real rate of growth in GDP plus the inflation rate. So you get it all wrapped up with nominal GDP, and the best way to predict it is changes in the money supply. And what have we seen? If you look back to July of 2022 and look at the money supply, now look at the money supply, the stock of money is actually a little bit lower now than it was a couple of years ago. So
Yes.
we have the stock of money has contracted. That's one factor, and the current rate of growth in the money supply year over year is significantly lower than Hanke's golden growth rate of 6% of M2 growth year over year. That's consistent with hitting a 2% inflation target. So the stock has gone down over the last actually year and a half, 2 years, and the rate of growth, although it's picking up a little bit, it's still below where it should be if the Fed wanted to be hitting its inflation target of 2%. So that's what the, that's the story. That's the slowdown. Now, why am I pretty convinced that there's going to be a slowdown? We've only had 4 times where you've had significant contractions in the money supply in the United States since the Fed was founded in 1913. And all of those, as night follows day, we've had recessions. Actually, one of them, we had the Great Depression.
Great Depression.
Yeah, the money supply, the stock of money went down from peak to trough about 39% from the 1929-1933 period. So it was a huge plunge in the stock of money. And that, of course, set off the Great Depression. And then you had the Smoot-Hawley tariff come in, and that added to the problem. That complemented the the slowdown in the money supply, the collapse of the money supply, and we had a terrible Great Depression. So today we've got the slowdown in the money supply. We've also got a lot of threats of tariffs, by the way.
And
Not,
I want to talk about.
so by the way, the Smoot-Hawley tariff was a big deal because the U.S. put the tariff on, and our imports of goods in the United States went down by about 70% from where it was before. So there was a huge contraction in imports coming into the United States, and that meant economic activity overseas contracted, and there was a tit for tat. We put the tariffs on, but then the foreigners put tariffs on us. So international activity shrunk, and we had a worldwide Great Depression. It just wasn't the United States. It was a worldwide problem that we had during the Great Depression. So that's the kind of back. I'm not saying, by the way, that we're going to have a Great Depression. I'm just saying that we're we're inevitably going to slow down, because when you get these big changes in the money supply, there's a transmission mechanism and a lag between the time the change occurs in the money supply and the time in which economic activity, that's real GDP, and inflation start changing.
So
So,
you're
so
not
that,
saying a Great Depression, but are you saying it's a slowdown? But is it a recession?
well, uh, I have been saying, along with John Greenwood, by the way, and we've been wrong on this. We anticipated that there would be a recession this year. There never was a recession this year. And the reason why is that with the pandemic, we had a tremendous increase in the money supply, and of course, we got inflation as a result of that. We got huge increases in asset prices, and and we had increases in economic activity. That buildup in the money supply was kind of what we call a cash balance overhang. It built up a huge stock of money, and it kept the engine going for a lot longer than John Greenwood and I anticipated. Finally, about the middle of last summer, that kind of got burned off. So now we're kind of running on fumes, shall we say? So it was a tricky call not to call the inflation. We hit that right on the nail on the head. We said inflation would go up because of the money supply increase, and it would go up to, we thought, 9%. It peaked out at 9.1%, and then we changed and we said it would be going down, and it has been going down. And by the way, this year, not next year, we are in 2025. I think we'll see headline CPI numbers, some of them coming in a little below 2%, which is the Fed's inflation target. And the reason for that is because of growth rate in the money supply. Not only we have this contraction, we have the overhang has been all burned off, but the rate of growth currently in the money supply is quite a bit less than, it's only a little over 3%. And the rate consistent with hitting 2% inflation target is about 6%. So inflation will come in, continue to come down. That's pretty much baked in the cake. It's the slowdown of economic activity, whether it's a recession or a slowdown. I'm at this point, the only thing I'm really certain about is slowdown. I'm not really certain about recession, because Greenwood and I have been calling for a recession for the last year, and it's not happened yet. So we'll wait and see. But the slowdown is baked in the cake.
You mentioned the tariffs, and we have some conflicting reports on these tariffs now because President-elect Trump is just this news just breaking now, a professor denying a market-moving report. He plans to enact more targeted tariffs rather than the across-the-board levies touted on the campaign trail. Earlier, there were reports he was considering a plan that would still apply tariffs to all nations, but narrow that focus to a select set of goods and services. So we're going to be tracking this story. But I think, regardless, your history lesson about former tariffs is good to revisit here, because there's this debate of, should we become isolationist? Should there really be a made in USA, made in America revival? Talk to us about the pros and cons here.
Well, they're all cons or no pros. Tariffs are a complete disaster. They're like sanctions, and they always backfire and don't produce what is promised, and that's more American jobs. The, this is just a nonsensical argument because it's to bring back manufacturing supposedly in the United States. That's kind of the headline, and you have to think about this. What is going on over the long term? Manufacturing output in the United States goes up. It goes up, but the jobs go down. Now, why is that? That's because productivity, the output per hour of labor put into the system, keeps increasing. That's productivity. So you don't need as many workers to produce more and more things. And that's what happens with technical change. And that's what's been going on for decades in the United States. We've been losing manufacturing jobs, but the manufacturing sector is vibrant. It's big time. So the tariffs aren't going to turn any of that around at all. And by the way, we will get counter tariffs put on us by foreigners, which is going to make it more difficult for us to export. And the tariffs with regard to U.S. manufacturing are a bad deal because the imports that we import that go into manufacturing, if you have tariffs, are going to cost you more. So the inputs going into manufacturing are going to be more dear. They're going to be more costly. So it just is a way to drive costs up.
Okay, let's use this. Let's use a very basic example: a plastic cup. Okay,
Yeah.
Professor, would you rather have the plastic cup, even though it didn't increase jobs per se in the US, but produced, made in the USA? You know that there's stricter legislation in terms of, chemicals used to produce it. Or do you want to pay less and have it come from China, where perhaps there weren't great working conditions for the people and harmful chemicals were used to make it? Which cup would you prefer?
Here's the way you have to look at it. If you have a free trade, and I'm a free trader, and free and open markets, you're selling me a cup, and I'm willing to buy the cup. You're willing to sell it because it's beneficial to you. Otherwise, you'd never sell a thing. And I buy it because it's beneficial to me. And so we have a buyer and a seller. They're both benefiting. And why is the government? Why are politicians interfering with that transaction? That's the problem with tariffs. You've got somebody in Washington D.C. saying, no, you can't sell me that cup, and I can't buy that cup at the price you and I voluntarily agreed to exchange the cup for. We have to put a sales tax on that. And we have to put a sales tax.
Yeah.
Maybe the rationale will be, oh, the foreign labor conditions are different than they are in the United States, and therefore it's somehow unfair or immoral or something like that. I would say it's immoral for the government to be interfering with you and I, who are voluntarily agreeing to you sell, me buy at a specific price, and whatever the other things are in the term sheet that we probably want to have a term sheet if we have a cup. That's pretty easy, but
So, Professor, how do you think this tariffs drama will play out? What's your hunch?
Well,
Are they just
it's a,
threats? Are they?
it's Trump claims various things. It depends on the day the, and the interview that he's making, but in general, Trump is a mercantilist. He has a lot of ideas in his head. Many of them are completely contradictory, and therefore don't really make any logical sense. But but when it comes to trade, he is a mercantilist. He's never seen a intervention in international trade that he doesn't like. So that's one idea that's pretty clear and pretty fixed. Exactly how he plans to implement his mercantilist ideas that he has in his head, we don't know, and I don't think he knows. I think he's a kind of guy, that I think decides when he has somebody across the table and he's negotiating. He decides what he's going to do then, almost on the spot. But the
Right.
orientation is one of mercantilism. Now, if you take contradictory ideas, let's talk about currency, because that's something else that Trump's talking about. And he wants everybody to be using the US dollar. He's promoting the US dollar one day, but then he's promoting cryptocurrencies that are supposedly a substitute for the US dollar on another day. And then in another day, he's saying that the BRICS countries can't be producing a currency that competes with the
Right.
US dollar. They have to be using the US dollar, or I'm going to put 100% tariffs on all the BRICS countries. But that's inconsistent because one of the countries, Russia, that's a member of BRICS, is sanctioned. It's not supposed to be using the dollar or the SWIFT payment system. So you have all these confusing things and
You
contradictory
do.
things going on in his head with regard to currencies. But that's not the case with trade. Trade, it's always this general mercantilist kind of idea. He thinks, as many businessmen think incorrectly, that trade's a zero sum game. If you and I trade, maybe you benefit, but I lose exactly what you're benefiting, or vice versa. That's the way they think about trade. That it's a zero sum game. Trade's always a positive. The buyer and seller always both gain.
We saw, Professor, how quickly Prime Minister Trudeau ran down, flew down to Mar-a-Lago, though. So obviously, if they're just threats, let's say, are scaring countries, concerning countries.
Well, you know that old adage, the way you get a mule's attention is to hit it over the head with a club. And I think Trump clearly got Trudeau's attention.
Yeah. Well, we'll see by the time this interview airs if Trudeau is still in power. Since as we're speaking, there's talks that he may be stepping down any moment. Going back to your history lessons, you tweeted that you wish Elon and Vivek good luck, obviously with their Doge, their Department of Government Efficiency. But you reminded us of Ronald Reagan forming the Grace Commission to curb government inefficiency.
Yes.
You said there were 2,500, at which you worked on 2,500 recommendations that eventually were ignored.
Right, and I was involved in that as one of Reagan's advisors, and participated in the Grace Commission, which it they produced a very impressive uh, set of reports, and as you say, 2,500 recommendations, and and the thing I was in particular focused on was shrinking the size of the federal government's balance sheet. That is, privatizing assets, surplus assets that the US government owned, which would shrink the balance sheet. And let me give you an example of the problems that I ran into. Of course, one thing we have, they have a lot of surplus assets. The balance sheet's way too big. And the idea was, by the way, that 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 we would sell the surplus assets and use the revenues to pay down the national debt. And one type of surplus asset that we have are military bases, naval bases, air force bases, that sort of thing that aren't necessary. They are surplus. But if you go into one of those bases to try to turn it down, to try to privatize it and sell it, the base is located in a state, and every state in the United States has 2 U.S. senators, and there'll be one congressman
Mhm.
or congresswoman from the district that the base is in, and they'll fight the thing like hell, which they did. I mean, you it isn't surplus to them.
Right.
You see what I
Right.
mean? So
Yeah.
you had all kinds of things like that. One piece of surplus property, by the way, the Defense Department had huge warehouses, and what was in the warehouse? Well, I looked into it, and they were vacuum tubes from World War II. And the Defense Department dug in their heels. They said, well, it doesn't really cost us anything to maintain that warehouse, and we might need these vacuum tubes someday, so we don't want to sell them.
Right. Your point is Elon may have been able to cut out the inefficiencies at Twitter, now X, but it doesn't work the same way on the government level. And when I had Dr. Ron Paul on recently, I mean, he kind of echoed your thoughts here, Professor. Of he would love to see inefficiencies brought down in government, but he kind of questions how successful
Yeah, see,
they could really be
the
here.
thing is that here are 2 points that I want to make. One is that
Yeah.
Ramaswamy and Elon Musk are only focusing on what I call the flows, the income kind of statements, the tax revenue going in, or mainly the government spending going out, the flows, like an income statement. Everything they're talking about is in the income statement flow idea. What I was just telling you about is the balance sheet, and that is a blind spot that they have. They're not talking about anything on the balance sheet. And that's where the big bucks are, by the way. So right away, conceptually, they have a very limited view of what they're trying to do. That's one problem. The second problem, and just to be clear on that, they're focusing on the income statement, not the balance sheet of the federal government. So that's a problem. The second problem is that they don't really understand that the incentives in the public sector are not the same as in the private profit and loss sector. If you're running a company in the profit and loss sector, you have to look at your income statement and your balance sheet every quarter, or certainly every year, and if the thing isn't working right, you're going to go bust. So you have a huge incentive to correct things and clean things up. The public sector, that doesn't work that way. There's no one at the end of a quarter, at the end of a year, looking at an income statement, looking at a balance sheet, looking at projects to see if they were actually successful and delivered what were promised. That never happens. In fact, look at the Department of Defense. They can't even audit the Department of Defense. They can't even run an audit.
Professor, the question is why? Why doesn't that step exist?
Well, it's because they're not operating in the private profit and loss sector. The government is not private property. There are it's not like a private business, and that's why
Right.
businessmen, even Peter Grace, who's a great guy, by the way, a fabulous guy, great businessman. he, the businessmen have the idea that they can go in and run the government like they run a business. It doesn't
Yes.
work that way. The incentives, economics, Daniela, is all about incentives. And the incentives in the public sector are not the same as in the private sector. That it's just that simple.
I want to get in a point about Europe here because you highlighted, and I can't believe this, 16 years ago, the US and the EU economies were nearly the same size. Today, the US is 50% bigger than the EU's. Let's talk about the problems the EU is facing. How critical are they? Is it just too much red tape? What are the issues in Europe here, Professor, and how concerned are you for the EU?
Well, I'm quite concerned because the numbers that you just uh, articulated are the story. I mean, that's what's been going on. Now, the question is why? Well, you have sovereign nations, 27 of them are members of the European Union. And so each one of those sovereigns, they have their own set of rules, regulations, mandates, and so forth. Then you've got the EU up on top of the thing that's located in Brussels, or in the case of the central bank, it's in Frankfurt, the European Central Bank. So you've got layers and layers of government, and that means you've got miles and miles of red tape. If you read any of the papers, look at the Wall Street Journal. Every day
Mhm.
there's some new EU regulation coming in that blankets all of those countries. So that is the red tape problem, the governance problem. That's one thing, and a big thing, and then you look at the precise policies that are being followed in the sovereigns or in the EU, and take Germany. The big powerhouse for Europe, of course, has always been Germany. And Germany's economy is very much oriented towards manufacturing. 23% of GDP in Germany is accounted for by the manufacturing sector, whereas most of the other countries in Europe, it's around 10, 11, 12%. It's much lower, the manufacturing. Now, manufacturing requires a lot. It's very energy intensive. It uses a lot of electricity, to make a long story short. So what we've had in Germany is is kind of a suicidal set of policies with regard to energy. We had Chancellor Merkel, of course, deep sixed nuclear power. They don't have any more nuclear power, and they and the new coalition, the new left wing coalition that operates in Germany, it's very green, and they have a lot of wind and a lot of solar power. That's supposed to be powering the economy. The trouble is it's very expensive, and electric prices have shot way up. And in addition to that, there's no more gas coming from Russia. So
Yeah.
the Germans are just committing suicide. So you have the big powerhouse is in deep trouble. They're in the longest recession they've had since World War II in Germany. So that's just one place. And then you go to France and it's not much better.
Right.
And you go down to Spain, it's not much better. You go to Italy, it's not much better. Italy is is in big trouble too. And why is the euro so weak? Well, it's because of what we're just talking about. Everybody keeps talking about the greenback. Is gonna the king is gonna be knocked off the throne. The U.S. dollar. This is just nonsense. The U.S. dollar on the dollar index is extremely strong right now. It's almost as high as it's been for the last 20, 21 years.
Do you think we will see the dismantling of the EU?
I uh, am not predicting anything on that. I just think continued troubles and turmoil, And these governments, by the way, remember we've had now how many? We've had two governments in France in the last, or three, I guess, in the last year. Now we have a new election coming up, a snap election in February in Germany.
Mhm.
So the political environment is extremely unstable because if the economies are are being shut down with all this red tape and so forth, you have political turmoil. And the two big countries, France and Germany, it's just a huge turmoil. The only one that seems to be relatively stable actually is Italy, of of
Right.
of all
Surprisingly.
yeah, of all places. I mean, Italy. So
Well, she's been praised certainly by President-elect Trump. And I actually want to ask you about this because Italy just planned. This news just came out. They're planning a 1.6 billion SpaceX telecom security deal. Italy's in advanced talks with Elon Musk, SpaceX for a deal to provide secure telecommunications for the nation's government. When you see that headline, I mean, we know how close Elon Musk and Giorgia Meloni are. So is this really for the greater good of Italy, do you think, Professor Hanke?
well,
Or
the details
or
I don't know, but what this is getting into is it's all of these deals like tariff, like this deal or tariffs. It smacks of kind of what we call crony capitalism. You know, you got to be in bed with the politicos. The politicos have too
right.
much power. That's what's going on. And with tariffs, by the way, Trump, put in a lot of tariffs in his first term, and Biden continued those and even added more tariffs during the Biden years. And what happens is that people want to be exempt from tariffs. The businesses don't want tariffs, and they hire lobbyists, and the lobbyists do what? They pay off the politicians so that they can become exempt from the tariffs. So there was a lot of talk about tariffs with Trump, for example, but there were a huge number of exemptions. And how do you get them? You buy them. You pay off
Yeah.
politicians. So
Yeah.
all of these regulations, whether it's in Europe, we talked about the EU and the 27 sovereign nations, they all have politicians, layers of politicians, and all these interventions that they make and stupidities that they make, people don't want to be corralled with those things. And the only way you can avoid it is to get a lobbyist in there and pay off the politicians. So the level of corruption is going up, up, up. As you
That's what
politicize things and make more of the decisions being taken outside the private sector, outside the profit and loss sector, in the public sector, you're asking and inviting corruption, and that's what we have more and more corruption. So
that's what
so
it looks like to me. Yeah.
so, so by the
Thank you
way,
for that.
by the way, another big problem for Europe is that they have the VAT tax, value added tax.
Yes.
It's kind of like it's like a cousin of a national sales tax, and this is one reason. This is the stupidest tax, by the way, and it's very high in Europe, and it's
Yes.
very damaging. The VAT slows down Europe tremendously. We don't have a VAT in the United States. One thing that separates the United States from Europe is the fact that we don't have a VAT. Now,
Well, let me just ask you this.
oddly enough, a lot of conservatives in the United States stupidly argue that we should have a national sales tax, which would be like a VAT. It's the dumbest thing. It's a way to
Which we have in Canada.
yeah. Well, why do you think Canada limps along? They have a VAT. If you look at any of the countries as VATs, it's it's a it's a slowdown. It's shifting down gears. If you put in a VAT, you're going to
Wow.
slow down.
Well, it's the GST here. You know what? I need to bring you back for another session of why you think Brian Mulrooney ushered that in. I'd love to get your perspective on that, but
I
we'll
think
save
that
that.
I think to make a we can talk about this. It's a very interesting topic because there are very few people who understand it, and I think Mulrooney was probably just giving bum advice. I don't think he had probably anyone in there. He probably had. I know what the advice was. This is a very efficient way to raise a lot of money. That's the advice. That's what most economists would say. But most economists are wrong, and which is by the way often true.
This is just a fascinating conversation. I absolutely love speaking with you, Professor. It's our Outlook series. Just final thoughts for our viewers watching. If there's one, let me ask you this: if there's one thing you're really eyeing in 2025 that you're maybe really concerned about, a red flag, what would it be?
Well, this is a Daniela, another full session we need on this. My bubble detector is up pretty much close to its all-time high, and that means that the stock market is in bubble territory. It's very expensive, it's very overbought, and it's very overhyped. So I'm watching the stock market. I'm not predicting, but I'm watching. You said, what am I watching? Very carefully. I'm watching my bubble detector, and the bubble detector is going up, 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 and that signals to me danger.
I had a hunch when you didn't want to make a forecast on the EU that you're also sensing danger.
Oh, the EU. The, Germany is kind of a key indicator. You know, it's the most important economy in Europe, and it is in the tank big time. And it's in the tank because, to put it simply, there are no more nuclear power stations operating in Germany. There's no more Russian gas coming into Germany. Electric prices are to the moon, and industry is being destroyed very rapidly in Germany. And the political environment is very unstable, with with a lot of the elites in the power structure being, I think, completely incompetent in Germany. So it's a very gloomy thing. And again, that's the big engine of Europe, Germany.
Professor, I thank you for this excellent interview. Thank you.
Well, thank you, and happy New Year to you. Great to see you.
Great to see you as well. We'll see you soon. We will bring you back. We need more of you. So we'll get Professor Hanke back on the show. But in the meantime, be sure to sign up to danielacambone.com so you stay on top of it all and sign up to our YouTube channel. That's it for me. We'll see you soon.